You're also welcome to this video. So in this video, we are going to be looking into a strategy that I have been testing out for 2 months now. So I've tried this strategy on Euro USD. I didn't really like the results, but on both of my pairs, my major pairs, which is BTC and gold, it has actually been working very well. Now, if you've been following me for some time, you know that the main strategy that I actually use for trading is the should I call it smart money now? Well, we normally have a breakout structure, then we'll have some kind of liquidity, then price drops down, then gives some kind of change of character, then take a trade and aim for the upside. So this is basically what my strategy, right, normally look like with some kind of I use some kind of Fibonacci, something like that. So if you've been following for some time, this is what you notice that I've been using. Now the major flaw before I show you this particular strategy I'm talking about, the major flaw with that strategy or the current strategy that I still use is that when the market starts to um range, you start getting into a lot of stop outs. You get your stop loss gets hit a lot of times, especially if you apply it to day trading, right? If you're not maybe you're not using swing trading. Now, for example, in this whole area, right, when we had BTC started making this whole move over here, trades were actually just hitting TPs. Now, once we get to this area, when the market starts, ranging, it starts becoming a little bit tricky. As you can see, we start having a lot of liquidity sweep down to the downside, and this is one of the major challenge of that particular strategy. Now, I'm not saying it is not a good strategy, but for someone who focus just on one pair or two pair, and you are looking at the 4 hour structure, because I use my most of my structures that are 4 hour structure, so it is a little bit challenging. So for 2 months now, I've been looking at this particular system. Now, you might not really see this particular system anywhere on YouTube. I don't think so, because there's actually no name. The name I gave it, which is a neckline liquidity strategy, is just based on how I've noticed assets like gold and BTC react to necklines. Now, the reason I call it neckline liquidity, first of all, let me explain the concept, right? The psychology behind this particular concept. Now, I'm going to use this whole area. Where should I use now? Okay, let me use this whole area, right, as an example. So the concepts in summary there. Remember, I told you guys that points of interest is something you can't do without. You in any system you are trading, you must always have your points of interest or points of action. Now, this strategy has to do with making the neckline, all right, a point of interest, meaning you get ready to take action when price approach the neckline. Now, the reason why I find the neckline, especially on BTC and gold, very, very powerful is that the way I see this market is that, for example, this area, when the buyers continue to buy this market all the way up to this level, you can see that they try to push the market upwards or push the market further, but sellers said no. All right, then in the next 4 hour candle, by the way, I only focus on 4 hour neckline because that is where you have stronger points of interest compared to the, let's say, 30 minutes or 15 minutes time frame. Sometimes 1 hour, but mainly 4 hour. All right, so if you're looking to take a very solid trade, now in the next 4 hour, you can see that buyers try to push this market upwards, but they couldn't. Sellers attempt to push it from here, they couldn't, so they closed the price in this middle. Now, in the next 4 hour candle, the buyers tried to, if you look closely, you see there's a wick over, little tiny, very tiny wick over here. So the buyers tried to push this market upwards, but the sellers took control. But where the sellers and the buyers agreed that, okay, we are no longer going to continue moving this market upwards, let's push the market down. That area becomes the neckline. That is how the neckline in price action, you know, came about. And that is why I made that neckline a very strong point of interest, because um this is where on the price of that particular asset, the buyers and the sellers agreed that price is not going to go down. So whoever is controlling this market, let's say the whales or the banks or the institution, whatever you want to call it, the big boys, right? Right, the OGs, this is where they decided that price was going to come down. So the regular retail trader does not have enough, because the regular retail trader does not have enough money to continue pushing this market. They have no other option than to respect the decision of the big boys. So that now makes area over here a solid resistance area. Let me just use that word so that it will relate better to you. A solid resistance area. So this now becomes an area where if price retraces to in the future, the big boys will say, okay, this is where we decided our price is going to go down. Um should we now um take away our agreement, right, and allow price to continue going up, or should we continue to, or should we bring it down again? So this becomes a kind of a decision. I call it an agreement price line or a decision price line. So that decision price line becomes the neckline, or the neckline becomes the decision price line, where you are most likely going to see price react to. Now, this is both for the bullish and the bearish scenario. So this is where you want to mark out. So what we are looking at here, depending on the trend of the market, right? So you are looking for price to retrace to this area so that you can take a sell, or for price to go above this area, retest it, then you can take a buy. Now, this is a little bit similar to support and resistance, but like I told you, the difference between this and support and resistance is because this gives you a precise price line. Unlike support and resistance, where you have to mark out the entire zone, all right, but this you are using just the neckline. You're focusing on the neckline. Now, let's see how price reacted. So as you can see, when price came to this area, when price came to this area, you can see it reacted and it sold, right? Now, there are other criteria that make a neckline valid, or somewhere you should mark, but that is going to be another video for another day. So as you can see over here, this is also a clear neckline. This too is also a neckline. So you can see that price came to that level, rejected, went to the other neckline from this area, and also rejected. Then as you can see, price kept rejecting from that area. So instead of marking this whole zone, right, you have specific area, specific lines on the chart where you are focusing on. So when you should be risking more, you will know. When you should be risking less, you will also know. So this is basically what the strategy is all about. Like right now we have BTC. By the way, I actually created an account specifically for this strategy. So, and I'm going to be making that account public. So if you want to follow my trades on that account, this is the account over here. Now, disclaimer, this is a demo account on Xness. So I'm not one of those that will come on and start telling you, start faking demo accounts to build a real account. So this is a demo account, but I am trading specifically this system. No other strategy, no smart money, no ICT, no trend line, just simple this using this neckline liquidity strategy. So I'm going to be posting the progress, and hopefully start getting funded using this particular strategy. Now, the reason I love this strategy is because of the simplicity. Like I said, if you go on YouTube there, you might not see this strategy, or you might see it, but maybe from a different angle. But this is not something I learned from anyone. It is just something I noticed watching a chart, because you trade a particular pair for some time, and if you're attentive enough, you start to see certain movement. Like I said, I tried this with Euro USD. All right, because now the reason I tried with Euro USD was because since it had to do with institutional decision price line, I was like, okay, maybe currency pair, since they are more related to institutions like bank hedge funds, might be more effective. But actually, it was actually more effective on gold and BTC. Let's see if we can look. Let's point out gold. So that account I showed you already, I think I've taken two trades, currently up by 3%. Now this trade I've closed it yesterday. I think this does not update. I think it updates either every 24 hours or every 12 hours. I can't really tell, but it's not a live update because this is a free version of my FX fund, my FX book. So that's why it's not, as you can see, it's not the live updates. If it were to be live updates, you see that this trade over here has been closed. So I've taken two trades since that yesterday, and I'm currently up on that account by 3%. So the aim is just to run this strategy for like 3 to 4 months thereabouts. Then I'll also get a challenge account using trading this particular system, and I'll also be documenting that right here on YouTube. So just check the link below this video. I'm going to be posting the direct link to the account so that you can follow my progress on this strategy. So as you can see over here, this is gold. And now yesterday I also monitored, like I said, I've not started using this strategy, not even in my signal group. I've not started using this strategy yet. Yesterday when this market started pumping, I came to see if that system actually was in play. Now I saw that on Friday during Asian sessions, you can see price came to this neckline over here. This was a very strong point of reaction. And when price tapped this line over here, it just took off and started pumping. So I already marked out some necklines for the following week, hoping I'm going to see price retrace to them, then take a sell. Now, initially, I used to use fair value gaps, but the problem I have with fair value gaps is that if you are to open, for example, Owanda, and you open Pepperstone, right, you are going to see that the way fair value gaps are displayed are very different. For example, this fair value gap here, if you open Pepperstone right now, or maybe any other, maybe let's say Forex.com or some other platforms, you might not see this fair value gap over here, but you see the fair value gap right here on Owanda. So focusing on one platform for analysis, and you are trading FEG, right? Adding it to your points of interest. When you're using FEG as an additional point of interest, makes it a little bit harder. So this is just something I'm pointing that some of you who are trading FEG might not really know is affecting your trade. But using neckline on every chart is almost the same thing. It's almost the same thing. So that is why that's another advantage of this strategy compared to the one I've been using. So um, I'm going to keep updating you guys on this strategy and also on my progress with that account. So let's see how it goes, guys. Guys, if you want to see how this whole thing plays out, make sure you subscribe and follow my journey. Let's get that cash, guys. Take care and do have a lovely weekend ahead. Bye.